On the show right now. Hi Ashish, morning, good to be speaking with you, and let me start by having your take on the auto space, because just yesterday we have seen great moves on the auto pack, and Tata Motors was also the top gainer on the Nifty 50, and now with this whole chatter once again trickling in with respect to EU and US deal, the stock can once again be a likely mover. What do you make of the auto pack, and any take specifically on Tata Motors?
Hi, good morning. So yes, I think Tata Motors, after seeing a very strong underperformance for last almost 6 to 9 months, now we are seeing very strong signs of recovery. Obviously, potentially because of the US UK FTA, and now we can see some benefits emerging out of this, and this can lead to some amount of re-rating which can happen in Tata Motors. We expect the stock to at least see 10 to 12% kind of upside from current levels in the shorter to medium term time frame. But overall, we believe that the entire auto space looks promising because of the domestic factors as well. We expect the rural and the rural economy to pick up because of good monsoons, and this can lead to good amount of buying in the entry level vehicles plus the tractor segment, and the biggest beneficiary of the same could be Mahindra Mahindra. So Mahindra would be our top preferred bet in the entire auto basket. As far as levels are concerned, I think Mahindra Mahindra looks good potentially for 3600 levels on upside. Technically on downside, stock has a strong support around 3200. So I think our preferred bet would be Mahindra Mahindra in the four-wheeler segment.
Take on some of these auto counters. Somil, coming to you, a quick chart check on Tata Motors and Bajaj Auto, or any other stock that you're liking from the auto pack right now. What would your pecking order be? Because a little bit of a recovery yesterday on the back of that India-UK FTA news we've seen on Tata Motors because of their JLR segment. But how is the stock looking like on the charts right now?
Looking at Tata Motors chart, it's not doing much. It has been in very, very tight range, which is 660 on the downside and 700 on the upside. So 40 points range. I'm not expecting anything very positive on Tata Motors. Been very sideways. It's been struggling to go about 200 daily moving average since last 6 months. So weak stock in the medium term outlook, but in the very short term, there could be a spike, definitely. If it goes above the 200 daily moving average and sustains there, I think then the medium term outlook will start changing. So 200 daily exponential moving average is at 737, and above that I'll be a little bullish, but at this point of time short term may see some spike, but not too bullish. On Bajaj Auto looks great actually. In the very short term, it has started making high tops, high bottoms. So I think there is a little bit of chance of positivity here. You can keep a very tight stop loss around 8179, and on the upside the targets would be around 874. However, there is one hurdle at 200 daily exponential moving average, which is 8,570. Once that is crossed, I think the medium term outlook and the short term both will look very great.
All right, that's the take coming in on the auto pack. But within the banking space, we'll watch out for IndusInd Bank as well, because Nishil, the news flow today on IndusInd Bank is actually where the company has announced raising of the funds through debt securities, and that could be amounting as high as 20,000 crores. So Nishil, this fundraising is a normal exercise for any banking major, but off late, the numbers are quite higher. We have seen QIP from SBI, and IndusInd Bank, on the other hand, which is reeling under pressure. The business is not looking that great. 20,000 crores of fundraising. Does it change anything for IndusInd Bank, and how do you take this news flow?
So I think it is going to be a positive one, basically, given that if they are able to raise this kind of money, not that IndusInd requires this kind of money immediately, but it's definitely going to shore up their capital, and that will give a comfort to a lot of shareholders. But I think the bigger problem with IndusInd remains to be basically once the new management comes in, and if there is a better bit of kitchen sinking I think in anticipation of that kitchen sinking only is what they are planning to raise this kind of money. And I think it's a combination of debt and equity. So the split is not known at the moment. But I think this is going to be seen as a positive one.
A positive move is what Nishchal is perceiving this fundraising move as. But Ashish, any take on IndusInd Bank given the kind of recent consolidation, the turmoil that the stock has gone through? Any strength are you seeing internally as well as also on the charts?
So we have always, avoided IndusInd Bank at least in the last couple of years. Obviously, the stock is trading at a much lesser price to book as compared to its peers like HDFC, Axis, or ICICI, and we know the reasons for the same also. That why this kind of low valuation was there in the stock. Now, obviously, the new management will come. So, as Nishal has already mentioned, that there will be a lot of kitchen sinking which will happen, and which will make sure that at least in next 1 or 2 quarters you might see a lot of additional provisioning which can come into it, and this can kind of create some pressure. So my sense is, yes, this short term news of raising fund will definitely increase the overall capital base, but from a market perspective, it looks like stock is going to trade in a range. Market would want to see more clarity at this point of time. HDFC Bank, ICICI Bank offers much better risk reward because of us very strong balance sheet and the expectation of strong credit growth momentum which can be seen in next couple of quarters. So our preferred bet in the private banking basket would be HDFC Bank and ICICI Bank.
50 NBFCs numbers as well. Nishchal, quick take on where you are seeing the NBFCs positioned amid the entire financial pack right now. If you could share with us some expectations from Bajaj Finance as well as the slightly smaller NBFCs, not from the Nifty 50 group of stocks. Where are you seeing NBFCs and how would you be positioning them amid the other financial segments?
So I think NBFCs should do better than the banks for the moment. I think at least for the next 2 or 3 quarters. And the reason being is the interest rate coming down. And as you know, most of the NBFCs are bulk borrowers in the market, and that's why their cost of borrowing is going to go down. But given most of them operate in a niche, so I think the lending will still continue to remain. So I think NIMs are going to improve for NBFCs, and that's why it's going to be a positive one for NBFCs. As far as Bajaj is concerned, yes, I know. I think they continue to do pretty well, but I think the issue about Bajaj is the valuation. Though I do not track it, I think it's 5 or 6 times price to book value, and that's a very, very aggressive and pretty steep valuation. So I would avoid it.
That's the take coming in on the NBFC major as well as the overall take on the banking versus the NBFC sector at this point in time. But with this, let's also get you some of the mid-cap ideas from both of our experts. And Saumil, you go first. Tell us within the mid-cap basket, which is the stock that you're eyeing this morning.
I think I still be going with a pharma stock, and in the pharma stock, I think Max Health looks great to me. Taking support at 40 daily moving average. I'll be expecting a good rally on the upside for Max Health. Stop loss should be around 1200 levels. It is trading at 1255 something, 1250 levels. I'll be expecting a good rally on the upside in the medium term outlook as well. But in the very short term, the targets would be around 1315, 1330 levels. And medium term targets would be much higher, above 1350 levels.
So that's the stock that Saumil's liking from the mid-cap end. Ashish, what about you? What are you liking from the mid-cap segment?
So we are positive on the overall new age themes, and we have seen numbers of Eternal, where the company has seen the Blinkit business doing extremely well and now crossed the food delivery business. Same is the case with Paytm, where we have seen the contribution margin going up significantly, and that has led to stock crossing an important resistance zone of 1,000 marks. And now I think the clear trend is visible in other new age businesses. So at this point of time, our preferred bet would be stock like Delivery. So Delivery looks quite promising because after its acquisition of Ecom Express, now there's a lot of consolidation which is happening in the entire logistic and 3PL business. So I think delivery is the largest in terms of revenue by into financial year 24-25 in the entire logistics segment. And after this e-com express, we expect the margins to expand, and the overall margins EBITDA can grow up by 28 to 30%. So I think there could be a strong re-rating in the stock. This is getting reflected into the price behavior. Stock has crossed its 11-12 month of consolidation phase with very strong volume activity above 430-440 mark. So keeping this in mind, I think there is now a strong base being formed around 410-400 kind of zone in delivery. And on upside, we expect the stock to see somewhere close to 525-40 kind of trajectory. So delivery is our preferred bet in the new age business.
It's always a constant debate as to one should be with the benchmarks or the broader markets. And talking about the broader markets,
see that they've approved implementation of market coupling with day ahead market. This is in accordance with the power market regulations of 2021, also an ET now exclusive. Nishal, any takes on the power sector right now, power generation or other segments of the power sector, and what's your view on the space?
So I've been pretty positive basically on the T&D side of the power sector basically, because there are two major drivers for that. One is the solar power and the evacuation of solar power. Unlike what you saw in the thermal power, basically you had large plants, but in case of solar, it is pretty well spread out. So you need to evacuate that power, and that's why the transmission and development lines are required. The second one is basically the reason that your system now consumes much more power, so the transmission lines need to be upgraded. So that's why you're seeing basically most of the new lines are now coming from 440 to 750 to 820 kind of a kVA. So these are the two major reasons, and transmission and distribution is the main area basically, which I believe has got a long runway.
All right, so that's the take coming in on the power space right now. But other than that, we have also seen great moves on Dixon Tech. Well, of course, that was backed by good earnings as well. But Ashish, how are the charts looking like for Dixon Tech? Do you believe that the up move can continue even today and at least in the near term? Ashish, I guess you have to unmute yourself.
Yeah, hello. Am I audible? Am I audible?
Yes, you are. Please go ahead.
Okay. So as a disclosure, we continue to hold Dixon in our portfolio. We believe that structurally the company has done one acquisition and one JV, which is going to increase the overall margin profile of the company from 3.5% to almost 4.5%. And this will get reflected into stronger profit profile for the company. And this is getting reflected clearly on the price pattern of the stock, where we have seen decisive breakout on both weekly and monthly charts with very strong volume activity. So keeping this in mind, I think now there's a strong base being formed around 15,800 kind of trajectory. If we continue to hold this support level above 15,800, then I think stock is poised for a move towards 18,500 to 19,000 kind of trajectory. So overall, we have a positive bias on Dixon Technologies.
EMS category is positive in trade, the sector in itself, and particularly for Dixon Technologies, it's moving ahead of EMS and also thinking about other business expansion strategies and ideas, segments in particular. 4 minutes for the markets to open. Keep an eye on Infosys, the last among the IT company that are part of Nifty 50 index, which reported the results. In comparison to TCS, Infosys was a better set, but also keep an eye on the Midcap IT plays. And Somil, needed your view on Coforge and Persistent. Quarterly results, if we talk about the Coforge numbers, largely in line with the estimates, in particular, if we talk about the constant currency revenue growth, and for Persistent also the margins were in line. What's your take on the Midcap IT plays? We don't see a positive up move, at least in the pre-open session, for the Midcap IT, Persistent and Coforge in particular.
Let's start with Coforge. Coforge has taken support at 40 daily moving average, but I think it's very range bound, and in the very short term, I think the stock should take support around 1800 levels, and then start the next rally on the upside. At this point of time, in the very short term, range bound, I'll be expecting this range to break on the upside. So the breakout levels for the stock is around 1890. Once it is above 1890, I think that the next rally starts, and the target should be around 2000 levels in the very short term. In the medium term outlook, also, I'm very bullish on this stock. I'll be expecting much higher levels in this. For persistence is a little negative. I'm not expecting much from this stock at this point of time. It is trading, or it is probably in a very broad range above the 200 daily exponential moving average. So the support lies at 5,480, and the resistance is around 5,960, let's say 6,000 levels. So this is a broad range which this stock is trading at. If it goes above 6,000 levels, then I think the next rally starts on the upside, but I'm not expecting much from the stock.
So not expecting much from Persistent at this point in time, but well, of course, the IT pack is going to be in focus, and along with that, all eyes will be on the consumption basket as well, and add to that list is the pharma space overall. Just a minute left for the markets to open, and quickly, Ashish, if I can have your take on HDFC Bank as well, because it is indeed indicating a gap up start. Any levels to watch out for in this one?
So definitely HDFC Bank looks very positive, and as indicated, as discussed also in the private banking basket, HDFC Bank and ICICI Bank, these two stocks are top picks. We believe that from a level perspective, first of all, if you look at the stock is a very strong base now around 1980, 2000 kind of trajectory, and if it continues to trade above these levels, then I think the stock is headed towards 2150, 2200 kind of zone. From a valuation perspective, it is trading around 2.2 times on a forward price to book, which is at a discount to 3-year and 5-year averages, and with strong credit growth expectation in next couple of quarters, with corporate credit improving, it looks like HDFC Bank could be a big beneficiary of the same trend.
Happy with the open. I was expecting a positive move towards the 20 daily simple moving average, which was around close to 25,300. But still today, I think we should reach the 20 daily simple moving average, which is 25,300. The stop loss is around, you can't say stop loss, but support is around 25,170. That is the first support, and the next support is 25,60. So these are the two supports for the day, and I'll be expecting markets to go above, close to around 20 daily simple moving average, which is 25,300. So my bets would be to buy on declines on Nifty. Bank Nifty on the other side is looking all right to me. It's not that bad because it is trading about 20 daily simple moving average and exponential moving average. So it is okay. It has taken the previous swing high of, it is 57,286, and today's high is 57,316. So it is good. Good to see that it has taken the high. But it is still in red, so I think it should take support around 57,000 and again head upwards towards the targets, intraday targets of 57,200, 57,300 levels. So both positive side. Pharma is looking great. So see, if you can see pharma, all the pharma stocks are doing really good, and I'll be expecting all the pharma stocks to even do better from these levels. Torrent Pharma specifically is one of my favorites at this point of time. I've already given Max Health and Dr. Reddy, spoken about Dr. Reddy. So pharma is looking good. Torrent Pharma, I'll be expecting a target of 3,700 levels in the very short term, and the stop loss should be around 3,500 levels. That is one tick, and the other stock in pharma space is Biocon, which is looking great as well. The stop loss is a little little deeper because it has seen a very good, spike up. 394 would be a very good support, and on the higher end, the target should be above 410, 420.
It almost seems like pharma is one of your favorite sectors, and why not? It's absolutely doing and playing the role of defensive at present because the markets are quite volatile, and it's the pharma healthcare diagnostic basket which is trying to support the market, and not just pharma, the automobile majors are also trying to help the markets, but it's a very tricky start at present as we see. Not that we are not sustaining the 25,200 levels, but the expectations were high. Nifty 50 did open flat with slight positive bias, which came in from HDFC Bank, and it tried to continue and give support to the market. But at the same time, now that we are seeing 25,200 levels, let's hope that it doesn't go down from here. And if we see 25,100, then further downside can be visible. But if it moves ahead and at least touches 25,250, then we can see signs of 25,300 as well. Markets have behaved maturely in the previous sessions, and we can only expect that from Monday, like we did see from 25,000 to 25,200 levels, on an optimistic note, if it moves ahead of 25,250, a positive up move is expected. But that's just an optimistic approach to the market at present. It's quite volatile, as we clearly see. Also, keep an eye on the fear